This is Barbara. Barbara is a speech therapist with a passion for designing, building and selling houses. In 2013, Barbara decided to leave her paid employment to concentrate on her property developments, which included the construction of 5 homes on the double block at Mitchell Park. To fund her project, she chose to finance through Tidswell. So why did Barbara finance a construction loan through Tidswell in lieu of the banks? What does Tidswell do differently? When assessing a construction and development loan, whilst we look at the developer's financial position, the viability of the project to repay the loan is the most important factor. We do not insist on pre-sales. We lend on the completed end value of the project, and that means the developer can borrow against the profit in the project, we can lend more money, and the developer has to put in less cash at day one. We provide a conditional approval almost immediately, and the formal approval takes place locally here in Adelaide. We can settle the loan quickly within a few weeks from application. We take a proactive approach to project management, and I visit the building sites regularly, at least once a month. When the project is finished, we do not take 100% of the net sale proceeds. We can maintain an agreed loan to valuation position with the borrower. That means the borrower can receive cash from each sale as it settles. So what is Barbara's story? Barbara purchased 2 blocks at Mitchell Park and demolished the houses. Tidswell settled the Stage 1 land purchase loan. We lent her 65% of the value of the land, which was about $320,000. Barbara then finalised the house plans, the build contract and lodged the development approvals with council. Once the development approvals were granted, Barbara was ready to start construction. Tidswell had the 5 houses valued on an as-completed basis and the valuation was $1.95 million. Tidswell then lent 65%, being $1.265 million, which included the existing Stage 1 loan, all construction costs and 12 months interest cover. Barbara had to contribute only $38,000 to the project at that stage. The loan was increased in drawn-in stages as funds were required, so the interest could be kept as low as possible. Construction started with no pre-sales. At completion of construction, 3 houses had been sold. Those sales settled and the debt was reduced accordingly. Another sale was negotiated within a month, and when this sale settled, the loan was repaid in full. This also provided a cash surplus, which we returned to the borrower at that point. This essentially meant Barbara received the 5th or the last home freehold. Her profit in the project was around $500,000, including the value of the 5th house and the leftover cash that was returned from the sale of the 4th house. This was a win-win deal for both Tidswell and Barbara. If you'd like to know more about how our boutique construction and development loan works, or you'd like to run a scenario past me, please call me, Max Bratton, on 0421 346 826. Thank you.